Smart people have designed cash value so that it can't go down due to market fluctuations, but it has the opportunity to go up when the market goes up. So you get some of the up, none of the down. That's pretty exciting. Hey folks, Colin Richards here. Once again, I am thrilled to be talking to you today about the principles of financial independence from a biblical point of view. And in this third segment of a series on where to put our cash, I would really encourage you, if you haven't heard the other two segments, to go back and take a listen, because in our first segment, we talked about why we need cash, the purpose of that. In our second segment, we talked about the vehicles to choose from for cash, how much to put there so that you don't overdo it and miss out on opportunity. And then in this segment, we're going to talk about a really unique opportunity to really get more than what we can usually get with safe cash-based investments. There are a lot of different tools out there where you have to emphasize or de-emphasize certain attributes. And there's really three core attributes. How safe is it? How liquid is it? And how much growth opportunity is there? With a bank savings account, a money market account, there's the opportunity today to be completely safe, to be totally liquid if it's short term, and to get a modest rate of interest, 3, 4, 5%. That is unique because in the past, those interest rates have been much, much lower. So typically, we're compromising on growth. There are also safe investment tools that offer the opportunity for growth. And I'm going to talk about one of those today because this is going to be an opportunity to maybe change our perspective about an asset class called life insurance. And at Lord & Richards, we're fiduciaries. Okay, we don't just shoot one bullet at Lord & Richards. They say, if you're a hammer, the whole world looks like a nail. I've talked to folks like that. You've maybe talked to folks like that. Even clients, consumers who get completely zeroed in on one investment. You know, hey, Colin, Bitcoin, I'm going to put everything in Bitcoin. Coin better not. And then they experience the crash. Or I'm going to put it all in life insurance. I've actually had conversations where I told people, I love that tool, but not to excess. But for a portion of your cash, either on a monthly savings basis or if you've been socking money away, it could make sense to put some into cash value life insurance. You say, why, Colin? That's a benefit to my heirs when I'm gone. I'm not really focused on that. And you don't have to be. That is certainly an important, and it's usually the first thing that we think of when we think of life insurance is passing money on. But life insurance, it was discovered many years ago, has a unique feature that it can build cash value inside within the regulations and laws that surround life insurance in our tax code, and it can do that tax-free. And smart people have designed cash value so that it can't go down due to market fluctuations, but it has the opportunity to go up when the market goes up. So you get some of the up, none of the down. That's pretty exciting. And we've seen clients do this for years and years and years. And we're not talking about trying to, outperform the S&P 500. We're just talking about getting steady, consistent 5, 6, 7, 8% annual returns. But here's the thing. They're tax-free accumulation if done properly. And there are a very narrow set of tools. It's not the life insurance maybe that you've seen or heard about with other advisors. There's a very narrow set of tools that allowed you to do this so efficiently that within a year you could be drawing money back out to support your business or a child's college education, or even to live on as your tax-free income. And we teach people about this all the time. I'm excited to be sharing this with you because we've been doing this for a long time at Lord & Richards, but now we're working together with the most sophisticated tax attorneys, our CFPs on the team, our enrolled agents who have the highest credential to represent you as a consumer to the IRS, really sophisticated tax planning team. Whether you're an individual or a business just looking to reduce your tax burden, we can take that burden down significantly, and in some cases, almost to nothing, through careful planning and the use of tools like cash value life insurance. But beware. Beware. If you just look up cash value life insurance and go to the first person who's written a book, there's books out there that I don't recommend, like Bank on Yourself and so forth. These books take the concepts to extremes using vehicles that don't really support it, like whole life insurance. Many people think, oh, whole life, that's the only vehicle you can do this. Well, often the costs associated with that are prohibitive. And isn't that what we usually think of when we think of life insurance? Oh, too much cost. Well, it's true. You've got to pay for that big death benefit. But there's a way to design a special life insurance focused plan where you reduce those costs to the bare minimum to fulfill the legal requirements to still be called life insurance, but yet maximize the potential for cash accumulation, and that, of course, tax-free. What difference does that make? Well, if you're just in the 20% tax bracket, that's a radical increase in your rate of return. The math doesn't work this simply. It's actually better than this, but just imagine if we got an extra 1 or 2 percentage points on your return every year just by not having to pay taxes because we're in a tax-free vehicle. You say, well, Colin, I got it figured out. I'm going to do that in a Roth. Yes, a Roth IRA is a great tool. If you put it in cash, it's safe but not growing. If you put it in the market, it's growing, but you can't be sure it's safe. We can actually blend the two concepts. Let's put it somewhere where you can access that cash for your needs and yet still have that safety and growth together. So we're putting together the best of all three: safety, growth, and long-term liquidity. Short-term liquidity, you don't want to do that. I've seen people make that mistake of just putting money into a policy like that and quickly damaging that policy's performance by pulling too much too soon. But over the long haul, over time, depending on the needs, depending on your goals, children or grandchildren's college education, living on it as tax-free income for you, supporting it as a cash reserve for your business to take money out, put it back in, I can teach you, my team and I can teach you how to do all of that and stay within the rules to be tax-free throughout all of those different transactions. This is part of an overall strategy. So I don't want you to hear me saying Lord & Richards is all about life insurance. We're all about all the tools that are needed for you to achieve financial independence. And we're working with people just like you every single day. Whether you're just looking forward to retirement after a long career, or whether you've had a business that has built up value and now you're looking how to take advantage of that through a financial independence plan, we want to help you. Every day, we're going to sit down with folks just like you, and I'd love for you to be one of them, to come share your goals, your values, your desires, your dream. It simply starts with a phone call.